Hello again, Adam. We are talking today about maybe one of the most important pieces of the work that we do each day, and that's retirement income planning. I know you spent a long part of your career focusing on this and even have the credential to show for that. So I guess I'll kick it to you first is what is retirement income planning?
Well, thanks for that intro, Dave. Yeah, so my credential after my name, RICP, Retirement Income Certified Professional. That means that I have chosen to focus on retirement income planning above all other financial planning topics, mainly because it's such a big deal. Don't get me wrong, all of financial planning is important. When a person is retired, what we're aiming to do or prepare them to retire is to build them an income that means they no longer have to have a job to be able to pay all their bills. And so retirement income planning really in its simplest sense is gathering up all their income sources or developing income sources by converting their saved up retirement assets to be able to produce enough income to meet that person's expenses during retirement. And as we'll discuss, there are lots of ways to do that. And it's a pretty dynamic topic. But in its simplest form, we're just trying to replace a paycheck from paid work with a paycheck that is derived from retirement income sources and saved up retirement accounts.
That's great. That's great. I think you summed it up well, and you may have already answered this, but I guess maybe to emphasize it a little bit more, why would you say it's important to have that income plan?
Well, it almost sounds trite, but we should have a plan going into retirement. If we're going to walk away from paid employment, it makes sense to kind of have a sense for where the income is going to come from. So it's really important because it's necessary to, keep the lights on to pay the bills. And the planning aspect is important because we want to make sure that we're not taking too much risk or too little risk or the wrong types of risk because retirement can be a 20, 30, 40-year journey. And so it's incredibly important to have confidence in the plan and confidence in the implementation of the plan to be able to be retired in such a way that we feel successful, that we're worry-free and able to sleep at night. So I don't think we can over emphasize how important income planning is to a retiree.
Yeah, I think it's even clearer that it's important because, you know, even as before retirement, income planning is arguably the more important piece than, net worth tracking. In other words, you can have a very strong net worth, but if your income each month isn't able to cover your lifestyle, then you have a crisis. And so really throughout your financial life, you're in the cash flow management job. That's kind of what you're trying to do as you're trying to manage your household expenses and thinking that. So it's converting that big pile of assets through the 401k, through the savings accounts, the banks accounts. It's maybe a little bit more it's not as concrete, and taking that into how does that work for me throughout the different phases of retirement?
Yeah, that's really interesting. I think there's a lot of help, support, emphasis put on saving for retirement.
Hmm.
Put it in the 401k, the 403b, put it in IRAs, just save, save, save. And then you get closer to retirement. It's like, okay, well, what do I do with all that money? How do I get it out of these accounts? What are the rules? What are the tax implications? And that can be overwhelming, quite frankly. And it's at a point in life where the numbers are as big as they've ever been, meaning if you're going to retire, you probably have a lot more assets than you did when you were 26.
Hmm.
So not only are the numbers bigger, but the consequences are a lot greater. Um, so making sure that there's adequate cash flow. And like you said, during a working career, income from paycheck is how most people generate cash flow. You have as much coming in as your employer says they're going to give you. But when you get to retirement, you have a lot of choice in the matter as well. You can say, well, what does our lifestyle cost? What do we want it to cost? And therefore, how much should we or can we pull out of these savings accounts to be able to live the life we want? So it's a pretty dynamic
Hmm.
decision-making process. And so like it's one thing that we don't get a lot of training in it. We just go to work and hope for the best. And we hit a point where we say, boy, I really could use some assistance here. And that's generally where we meet people, is when they're trying to figure that part out.
Yeah, because rewind not that long ago, there really wasn't all of these options. Essentially you cashed in, you stopped getting your paycheck from your company, and all of a sudden you just got the pension. And the pension, it was what it was. There was no like, oh, what should I do with this? And should I pull it from a tax deferred account, or should I do this or that? And so it really has kind of turned into, yes, more options, more autonomy in your own decisions, but also more complexity. And you want to make sure you're not stepping on any landmines, or any sort of blind spots that you may not know about. So I guess knowing that we've moved forward into this 401k, we're converting our nest egg into an income plan. I guess, could you give us maybe a sense for what the different ways to do that would be?
Sure. Yeah, there are a number of different ways to do this. And just as a reminder, most people are coming at this time in their life with a few questions. They're like, when can we retire?
Hmm.
How much can we retire on? Will we run out? What happens if there's a major life event, a health crisis, or something to that effect? And so they're coming at this from a sense of, in a lot of cases, concern. Yes, there's the need to know, and then there's the need to know this is not going to blow up here. So, with that in mind, when we look at the different ways in which you can build a retirement income plan, they are vast. And so, we'll break it down into a couple of kind of smaller chunks, if you will. One is basically called probability based, and another one would be based on more guaranteed sources. So, a probability-based retirement would be, and you may have heard this, taking a percentage of your saved up resources out each year to live on. So there's this, well, in 1993, William Bengen, a certified financial planner, said, we've tested backward in time and found that you can take 4% of your saved up nest egg out each year. And that percentage as a withdrawal rate will allow you to retire with very, very, very low chance that you're going to run out of money. So that has become what's called the safe withdrawal rate. So a probability-based retirement income plan would be based on the probabilities that have been developed that you will not run out of money. Here's how much money you can take out of your accounts each year, as long as it's properly invested, properly structured. Whereas on the other side of the ledger here, somebody might say, well, I don't really enjoy probabilities that much and having to possibly consider or worry about that. Can you just set me up with a guaranteed based retirement income plan? And the short answer is yes. You might use things like any number of different types of annuities, which are guaranteed. And those are designed to create an income plan that, regardless of the ups and downs of the markets and the economy, you know what you're going to get each month, each year, and for how long. So you can kind of see what's developed here is there's this kind of decision fork in the road that people face when they're considering retirement income planning, which is, are we comfortable being at risk? In other words, using probabilities, or are we more comfortable having this safe, guaranteed, secured? And of course, it can be somewhere in between, but you can see those two distinct paths here taking shape as people trying to figure this retirement income path out.
Yeah, and that second one you talked about, like the guaranteed one, it's kind of sounds similar to like a personal pension of sorts, where you're not working with the company that the previous company that you worked with, but you're maybe using insurance companies or other guarantees out in the marketplace to create that personal pension. And there are pros and cons to both avenues. I will say that one thing that both income plans are built on is one, most people do have access to Social Security, so they still may have access to a pension. So those are kind of the foundation of an income plan. What is Social Security, what your benefits going to be, and we did other videos on Social Security, so check those out. But really, trying to optimize Social Security benefit, a pension if you have it, and this is where the extra layer is. And well, how do you, whether it is the personal pension, the guaranteed, or the probability based, what you need to figure out is your expenses. And that it really is a critical piece of this whole retirement income plan is the expense management. So if you could maybe we may unpack that a little bit more on how do we encourage folks to figure out what their expenses will be.
Oh, that's a great point. Yeah, that is really the underlying factor in all this. It's a basically retirement income planning is a math exercise when you boil it down, and it has to have one variable solved for, and that is we need to know what it costs to live your lifestyle. So I would like to say there's an easy way to figure that out, and then there's a hard way.
Mhm.
And in life, oftentimes the hard way is the better way, but the easy way is this. So if you, let's say there's a married couple, if you want the easy way to figure out what your expenses are likely to be, you would simply look at what your income has been, subtract out the taxes that you've had to pay, subtract out any contributions that you've made into retirement plans all those years, and what's left is probably pretty close to what your lifestyle costs.
Hmm.
So you can kind of deduce your way into or back your way into figuring out your lifestyle cost just by subtracting out those things that aren't contributing to your actual daily expenses. Now, the hard way is to sit down and to figure out, well, where is all the money going? In other words, going through the credit card statements, going through check registers, going through all of your expenses to get very clear and very granular on where all the money is going. The reason I say I think, and I know you agree with this, the reason I think that is better if you do it that way, it's because each expense category or item you can evaluate and say, is that too much? Is that too little? Is that the right amount? And it allows you kind of own those expenses. And oftentimes, people will go through that exercise and discover we didn't even know we were spending that much in this area, or we have a bunch of subscriptions we're paying for that we don't even use, and it allowed us to really optimize or trim down these expenses. But I find that when people have that kind of clarity about what their lifestyle really costs by doing the hard work, doing the math, it gives them more confidence when people like us come in and say, oh, if you're spending this much per month, then yes, your resources, your assets, your nest egg can support that. So it helps their belief a little bit because they know they were involved in determining what that lifestyle cost was.
Yeah, I agree with that 100%. And also, by going through each of those expenses, why if you're looking back on bank statements or credit card statements, it allows you to run it through the filter of, is this going to change in retirement? So, is this expense going to go down? Maybe if you commute to work, maybe you're not going to spend as much in gas, or you may increase the travel, category of sorts. So I think that is helpful too, as another layer of doing it the quote unquote hard way to get a better estimate, knowing that it's still going to be an estimate, that just because maybe you come up with $6,000 per month on average, there are going to be those special months where it's like, oh, we had a house repair or fill in the blank. And that's certainly part of the equation, but we're trying to get close to, on an average month, how much does your life cost?
Great point. And if I could add another element to that, we also, in our planning that we do for folks and in the software, we always add in some inflation. In other words, the things that you spend money on, they're very likely to go up in price over time. So we want to factor inflation in. We want to factor in taxes. We want to factor in the problem, or I guess the likely investment returns. And so all of these ingredients help to contribute to a retirement income plan that is comprehensive, that identifies risk areas and helps to mitigate or to plan for some of those risks to be managed. But it's interesting because all of those like lead people to kind of ask, well, which is best?
Mm,
Is there a best way to do this? And it's easy to say, well, it depends.
you
It does. Um, but a lot of it happens in response to how well do you respond to risk? And there are a lot of different risks in retirement. So, and I don't mean that to sound ominous or scary, but just a lot of things we need to consider. And if somebody is naturally a worrier and they don't have a real strong grasp on a lot of these financial concepts, they might do better with a guaranteed or a low risk retirement income plan. Whereas someone else who enjoys the markets and is comfortable with volatility, and they might say, no, I'm going to play the probabilities because we might be able to grow our resources over time better if they're not guaranteed. So, but then you add another layer onto this where most couples, the glorious part of marriage is opposites tend to attract. And so in a couple, you'll have one who worries about money in ways that the other doesn't. So we kind of have to marry these two money styles in such a way that there's compromise and that everybody is okay with the methodologies that we use. And last thing, sometimes advisors are not all created equal, meaning some advisors just love one method versus another, and or they might be set up in such a way that they can only offer one way or another because that's what their firm does, or that's whom they have their licenses with or the products that they offer. So we tend to, of course, encourage people to work with advisors that can do all of these different planning methods so that you're getting the best one for you and not the best one for the advisor or the advisor's firm.
Yeah, because we all approach things with whether it's financial related or in life in general, there's bias and conflicts that you have to manage. So yeah, really kind of getting back and kind of going through this process of, okay, what are the expenses? Are those going to change throughout retirement? Do we want flexibility? You'll get closer and closer to what the answer is going to be in terms of what's best for you and your family. But ultimately, there is that tying the math and the emotion and kind of where you land on that spectrum. So ultimately, what is best? I think it does depend, but the answer may be more clear as you go through that process. So we've covered quite a bit of ground, and I think we did we could do a video on each segment of this that's 20 minutes long. So I think we sort of scratched the surface as well. But if someone was looking to get started, what do you think the best place to start would be the best place to start?
Well, I think that, of course, having some competent advisors in your life that can help you think through these things is incredibly valuable, and maybe even more so than just having help in investing. This is really nuanced. There are tax ramifications. There are all sorts of different decision points along the way. So seeking out good advice or advice givers would be helpful. I think gathering up your expenses and understanding what your lifestyle costs, gathering up your investment statements and your Social Security estimates by going to My Social Security online and getting what your estimates are likely to be, calling your pension provider and saying, hey, can you give us some estimates for what our pension options look like? Gathering all that information and then having a sense for what your lifestyle costs, and then sitting down with advisors that do this kind of work and ideally specialize in this kind of work, I think is a wonderful first step, although that's a lot of work. What I just described a lot of steps, but that's what I
Hmm.
would suggest, just gathering all the stuff, getting a sense for what you want your lifestyle to look like, and then sit down with folks that can help you think through this and help you implement in areas that can sometimes be challenging on your own.
Yeah. And we have a process here at Fourth Dimension. If you want to learn more about that, you can go to fourthdimensionfinancial.com, and we'd love to talk with you about your own situation. So I think that kind of I think we're at a point where we can kind of wrap this conversation up. And any final words, Adam?
No, I think we covered a lot of ground here. So
Okay, excellent. Well,
listening.
until next time, appreciate your insight, and thanks for hanging out for a little bit here.
If you're interested in seeing how we help our clients save time, plan right, and experience the retirement they've always wanted,
Be sure to schedule a conversation today.